प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines. Reserve Bank of India keeps key interest rates unchanged, says its biggest challenge is controlling inflation, warns crude oil prices pose significant risks. RBI Governor equates cryptocurrency craze to the tulip mania of 17th century, says the assets have no underlying value, calls them a threat to macroeconomic and financial stability. RBI's dovishness delights stock market. Nifty ends above 17,600. Sensex takes winning run to third day, gains 460 points aided by IT, banking and metal stocks. Countdown begins to India's biggest IPO, LIC, to file its prospectus with SEBI tomorrow. Business Today TV brings you a special preview to the great Indian IPO. Finance Minister Nirmala Sitharaman replies to the debate on budget in the lower house, appreciates the participation of members, slams Congress for its Antkal jibe. No action from the Reserve Bank of India enthused investors and markets took the winning run to the third day. Sensex maintained its upward movement, rallying over 460 points, almost making it to 59,000. Cheering RBI's accommodative stance, the Nifty 2 gained 142 points to shut shop above 17,600. Gains in financials, IT and metal shares pushed both indices higher. All sectoral indices ended the day in the green except for Nifty Auto. Gains on the Nifty were led by ONGC, Tata Steel, Infosys, SBI Life and HDFC Bank. Laggards, Maruti, IOC, Shree Cement, Ultratech Cement and Adani Ports. On the other hand, the newly listed Adani Group company, Adani Wilmar, has been making headlines. Shares of the company have rallied a whopping 73% in 3 days. On the back of this sharp rally, Adani Wilmar has joined the group of companies having market capitalization of 50,000 crore rupees. The Reserve Bank of India kept key policy rates, including repo and reverse repo rates, unchanged for the 10th time in a row and retained the accommodative policy stance. The governor said the central bank has been continuously taking efforts to limit disruption caused by the pandemic to the economic activity and stated that continued policy support is needed for durable and broad-based recovery. The RBI has projected 4.5% retail inflation and real GDP growth at 7.8% for FY23. The big surprise is the extremely dovish inflation guidance. Talking about cryptos, RBI Governor also made it very clear that private cryptocurrencies threaten macroeconomic and financial stability.
The MPC flagged the potential downside risks to economic activity from the highly contagious Omicron variant. Reassuringly, the symptoms have remained relatively mild and the pace of infections is moderating as quickly as it surged. There is, however, some loss of momentum in economic activity as reflected in high-frequency indicators such as purchasing managers' indices for both manufacturing and services, finished steel consumption and sales of tractors, two-wheelers and passenger vehicles. The demand for contact-intensive services is still muted. The hardening of crude oil prices, however, presents a major upside risk to the inflation outlook. Core inflation remains elevated at tolerance testing levels, although the continuing pass-through of tax cuts relating to petrol and diesel last November would help to moderate input cost pressures to some extent. On balance, the inflation projection for 2021-22 is retained at 5.3%, with Q4, that is the current quarter, at 5.7% on account of unfavorable base effects that ease subsequently. As a result, of RBI's rebalancing operations, the daily average absorption under fixed rate reverse repo has moderated sharply since August 2021 when the rebalancing started. Overall, system liquidity, however, remains in large surplus, though it has moderated over the same period. Reflecting the migration of surplus liquidity from overnight window to longer tenors, the effective reverse repo rate, which is basically the weighted average rate of fixed rate reverse repo and the VRRs of longer maturity, the effective reverse repo rate increased from 3.37% as at the end of August 2021 to 3.87% as on February 4, 2022. Cryptocurrency, private cryptocurrency or whatever name you call it, हमारा जो मैक्रो इकोनॉमिक स्टेबिलिटी और फाइनेंशियल स्टेबिलिटी के लिए बहुत बड़ा एक थ्रेट है. आरबीआई का पॉलिसी एक्शंस इन वेरियस एरियाज, वो क्रिप्टो प्राइवेट क्रिप्टो करेंसी और क्रिप्टो करेंसीज विच हैव करेंसी लाइक कैरेक्टर, they will undermine RBI's ability to deal with issues of financial stability. जो इन्वेस्टर्स क्रिप्टो करेंसी में इन्वेस्ट कर रहे हैं उनको ये माइंड में रखना चाहिए कि जो भी वो इन्वेस्ट कर रहे हैं वो उनके खुद के रिस्क पे कर रहे हैं. They are investing at their own risk.
Let me welcome in Aditi Nair joining us from ICRA. Aditi, great to have you with us. The RBI is bringing many a surprise today, primarily the dovish stance. Take us through what you felt were some of the key takeaways.
Thank you. Today was an interesting day. As far as the stance and the rates were concerned, we were not surprised at all. We were expecting a complete status quo, no change in the monetary policy stance, no change in the repo rate and no change in the reverse repo rate. And that's exactly what we ended up getting. However, as you pointed out right now, the tone of the policy was a lot more dovish than what we were expecting. We thought this was going to be the last status quo policy, but I certainly now expect April to be another status quo policy, going by some of the commentary that's included in today's MPC statement. As expected, growth has been described as the growth recovery as incomplete and not yet broad-based, and that continuing policy support is warranted to be able to sustain and make the growth recovery more durable. But I think more so on the inflation side, there is an expectation that the MPC has conveyed that the inflation will peak out in the current quarter and fall after that. So as far as the trajectory is concerned, I would agree, but our own estimates of both the growth recovery and the inflation rate for FY23 are a little different from the RBI. We're expecting a higher growth in FY23. The RBI MPC's estimates of growth in H2 seem to be quite modest at 4.3% in Q3 and 4.5% in Q4, which is really quite muted. And perhaps that is something that they expect will contain any pass-through of higher commodity prices into final output prices, and therefore their inflation average estimate for FY23 at 4.5% is also a little lower than our own estimate of 5% with an upside.
And that's just what I was going to ask you, that, what are your estimates looking like? What's the kind of range one's expecting crude to hit or trade at this point of time? And what is the likely glide path of inflation going forward if we put aside what the, what the policy has sort of kept into account for today? They're also sounding incredibly dovish, even going ahead for the next couple of meets in terms of what they're indicating.
Absolutely. So, in terms of the outlook, we had thought that after a complete, status quo today, we're probably going to get a change in the stance and an increase in the reverse repo rate in April. Now we think that's been deferred by one meeting. So effectively now we think, going by today's commentary and tone, we're more likely to get a stance change and reverse repo hike in June, and then two repo rate hikes of 25 basis points each in August and October. So we basically push forward our policy normalization expectations by one meeting each. for each of these
Right.
changes. On the growth side, we have a slightly lower forecast for FY22. We expect growth to be more back-ended. And so for FY23, we are looking at a 9% growth, which entails about a 5.5 to 6.5% growth in the second half of the year. This is where we differ significantly from the MPC's forecast today, where they're actually penciling in a 4.4% GDP growth in the second half of FY23. So that's a significant deviation. On the inflation side, the average that the MPC has indicated today is 4.5%. We expect it to be closer to 5% because we do think that once demand revives, producers will pass through the recent rebound in commodity prices. So I think that's where the main
Okay.
difference lies. But in terms of the specific items like monsoon, for example, the MPC has assumed a normal monsoon. Our view is that even if we don't have a normal monsoon, because we've had a healthy volume of rainfall for the last several years, although the actual distribution has been uneven. So the likelihood of getting another year of normal or above normal rainfall does seem to be a little low. But
Right.
having said that, our reservoir levels are very healthy right now, and at least that mitigates against the negative of getting a potentially subpar monsoon rainfall. So I don't have too much of a concern on the food
Sure.
inflation side.
Sure.
On crude oil, I do agree that the current levels have been pushed up by the geopolitical tensions, and I don't expect crude oil to sustain at these levels for a prolonged period. They may stay at these levels for a month, 2 months, 3 months. It's really difficult to say how long this is going to continue. But eventually, I do expect crude oil levels to at least come back to what we saw in early January.
Okay.
That seems to be a more sustainable level given what we understand about global demand. Supply side issues, of course, are a growing concern in terms of the limited investments being made by some of the global fuel companies, etc. But demand has to hold up as well, and we don't think these levels are sustainable for too long.
Aditi Nair, thanks so much for joining us and taking us through the implications of the policy meet this time around. Incredibly dovish, but as Aditi says, in line with what they anticipated on repo and reverse repo. A countdown has finally begun in earnest for the country's biggest IPO. LIC is all set to file its draft red herring prospectus with market regulator SEBI tomorrow. The proposal earlier received a green signal from insurance regulator IRDA. The public issue is expected to be the largest ever in India, easily dwarfing the 18,300 crore rupees raised by Paytm last November. But some big questions remain. Firstly, what will be LIC valued at? Secondly, how big will the IPO be? What will be the price band of the share? And will the share be a good buy at that price? Also, what will the issue of this size do to secondary markets? We have Pranav Haldia with us to answer all these questions. But before that, let's listen in to what the Secretary of the Disinvestment Department had to say about the IPO in an exclusive conversation with BTTV's Managing Editor, Siddharth Ravi.
The Great Indian IPO is slated for March, and our DRHP will be filed this week with the SEBI. Going by the fact that policyholders have taken, have really blessed this organization for a long time. We want them to be the stakeholders, shareholders, and possibly, they will be also offered discounts.
Once listed, will LIC be amongst the top 3 companies in India by market cap?
Well, I think, as I said, that our embedded value is upwards of 5 lakh crore. So I think people are making guesses. As I said, that this is the early stage of marketing in this IPO. And once the DRHP is filed, that I think price will be discovered over the period.
Pranav Haldia joining us now. Pranav, great to have you with us. And I'm, just taking a look at some of the numbers that we've been reading. The valuation of life insurance companies is normally 3 to 5 times higher than their embedded value. So are we then looking at LIC's valuation being in excess of 15 lakh crore rupees?
Well, firstly, I would just want to say that it's a landmark moment indeed. This has been in the works for many, many years. and I'm very glad to see that it's finally seeing the light of the day. As you said, that this is going to be the largest issuance by far. Earlier, the expectation was that the issue could be as high as 1 lakh crore, but I think now the expectations are more on the lines of the issue size being closer to 50,000 crores. As far as the valuation is concerned, I think the expectation is for it to be around 13 to 15 lakh crores.
Okay. Okay. And how big do you anticipate the IPO to be? Because, I mean, even a 7 to 10% stake sale could fetch between 1 to 1.5 lakh crore rupees if we're going with that estimate.
Well, I think the expectation is for it to be around closer to the 50,000 crore mark. Again, we'll have better clarity once documents are out tomorrow. I think it's hugely anticipated, as the secretary also saying. They are looking at offering discounts to employees and to retail shareholders and to policy holders. I think it's going to be a landmark moment. It can lead to even more deepening of the market than what you've seen in the last couple of years. It can lead to even more number of retail investors coming into the capital market.
Okay, now what's the price band of the share likely to be? And I know I'm asking you to really, hazard a guess because we don't have all the details yet. But what do you think that they'll go for? Estimates, if we take a look at the disinvestment target, are still on the more conservative side. So what can we anticipate?
Well, honestly, I would not be commenting on the price band. I think let's wait for tomorrow. But I think what I would like to say is that, of course, there's a lot of concern in terms of, and you also just mentioned in terms of what impact it might have on the secondary market. So I want to make a point here that, there's been this, theory for a long time in India that whenever there's huge IPO issuance, it leads to a correction in the secondary market. I think the last 2 years, ever since the beginning of the pandemic, or at least in July 2020, which is when you started seeing IPOs really coming in, that has sort of, put that theory to rest, because not only has the primary market rallied, but at the same time, you've seen a huge rally in the secondary market. So it shows that there is enough and more liquidity which is available from institutional investors, from retail investors, and, both primary and secondary market can run in time.
Okay, so that's a positive sign then. For retail investors, is this going to be an attractive issue? Is it something that one should be looking to buy, given LIC's long history? How does it stack up vis-a-vis some of the other players in insurance space?
Well, LIC has huge brand value. I mean, it's the most brand in India. And as I keep on saying often that it's actually every Indian's first financial investment. If you go to any small village or town, you will find that the first financial investment product which any Indian buys is actually an LIC policy. So it's deeply ingrained into the ecosystem. Of course, being a government-owned company, there are no concerns on the governance side of it. But of course, the pricing needs to be attractive, and I would be very happy to see a good discount being given to retail shareholders and also existing policy holders of LIC.
Fantastic. Pranav Haldia, thanks so much for joining us and taking us through some of what we're anticipating with regards to the LIC IPO. That's the big IPO that markets are awaiting at the start of 2022. Finance Minister Nirmala Sitharaman presented a strong rebuttal to the opposition's claims on budget proposals during her participation in the debate in Lok Sabha. The Finance Minister said the health of the Indian economy was good and slammed the Congress's Ant Kal jibe on Amrit Kal.
Start with the fact that in 1991, we had foreign exchange reserves only for 2 weeks. उससे पहले emergency का काल भी हम सब जानते हैं. So Andhakal that was. Andhakal again in 1991, when you couldn't manage your foreign exchange, you didn't know what to do. And then, because you were trying to bring in reform, you also claimed we brought the reform, whereas that was under compulsion, like one of our members, honorable members mentioned it. That was Andhakal. Double-digit inflation during UPA 1 and 2, particularly in 2, was Andhakal indeed. And that's the Andhakal probably he's referring to. Every day there was headlines in the papers about corruption, 2G scam, Antariksh Deva scam, middlemen everywhere. Country didn't know what's happening. Every morning it was dreadful to see the paper with yet another scam. That was Andhakal, sir. Not knowing how to deal with a country after the global financial crisis, inflation touching 2 digits, and also the situation, macroeconomic fundamentals all going either udar. India became one of the fragile 5. That was Andhakal with policy paralysis.
It's raining e-scooters in the country. The latest to launch its fresh offerings in the e-scooter market is Armour Mobility, which has added to its portfolio of 5 models. PTTV's Chetan Bhutani spoke with Sushant Kumar, the company's founder and MD.
Tell us about the budget that announced the battery swapping policy. How are you anticipating, and are you a player for battery swapping?
See, first I would say that this battery swapping in the budget mentioned was I would say that the great step. Okay, I mean, government has been doing substantial things since 2015 towards EV adoption. We have seen FAME 2, FAME 1, FAME 2, and a lot of incentives and a lot of kind of things, production link, PLI scheme, okay, etc. is going on. So I would say that battery swapping was just addition to that continuous effort what is going on, okay, which is very welcome. And the very valid point is that, like this will further give boost to the customer, okay, that the infrastructure is getting built up. So range anxiety kind of thing will not in words, but also in means, okay, will be curbed in coming time. So yeah, of course, we are open to sell, like battery as a service, okay, or I would say rather energy as a service, okay. Once the policy comes, we'll definitely take some actions regarding that. We are open for that, yes.
Are you planning any launches for the festive season coming for 2022? And how much investments have you really put in? Recently, we have heard about fundraising as well. So what about fundraising, and how are you managing the spends?
Yeah, it is going on well, and we have a plan for festives in 2022. As I said, that we are going to launch at least 3 more products, all performance product by H1 2022. Okay, and I think work is going on. In terms of that demand, I mean the funds. Okay, yeah, the talks are going on. The company is exploring some potential opportunities, and I think you are going to hear it very soon. Beside the investors, okay, the banks also coming on board. Some national banks, some international banks are coming on the board. Okay, so it's a good news for us from all the sides. Okay, because the growth we are able to sustain, and we are able to keep the pace of growth, which is.
And how much are you planning to raise this time?
At this point, we are looking for 100 millions.
Okay.
Okay, in coming 6 months. So I think it will be easily done. So
can we expect an announcement within 30 to 60 days regarding 100 million fundraising?
I mean, it will be concluded within 90 days because this is going to take some time. So this is going to conclude, yeah, right.
And that's where we leave it on the show tonight. Thanks so much for watching.